G'day Harley, thanks for the comment. So we are in our late 50s, earn good money, but no one wants to give us a home loan because of our age. We see this problem come up from time to time and is a workaround, but it does require you to get some expert advice. So this is just general advice. I urge you to go out and get some expert advice to help you navigate this situation because there is some logic that supports the reason why you are having some challenges. And if we have the right strategy that supports it, we can typically navigate these challenges. So let's kind of run through it. So from the bank's perspective, a typical mortgage in Australia goes for 30 years. And if you are in your 50s, then ultimately it means that your loan, based on the minimum repayments, is going to go well into your retirement age, beyond essentially your work expectancy, right? And basically what the bank is looking for is they want some sort of exit plan that has been documented and can be articulated to them around essentially how you have a strategy in place to ensure that by the time that you retire, you can be completely debt-free. And this requires you to have two people in your corner. Your first person that you need in your corner is you need a really good strategic mortgage broker, because there are certain banks that have certain policies that will essentially allow you to leverage those policies to maximize the likelihood of you being able to get the loan approved. Secondly, you need a financial advisor who is able to create a financial plan for you that basically goes through the various pathways that are going to get you to being debt-free. Those pathways could be implementing a debt recycling strategy that is going to allow you to utilize good debt in order to then buy good investments that produce additional investment income to pay off that loan faster. The allocation of surplus to tackle that mortgage and forecasting, showing based on your surplus rate, how many years is it going to take you to pay off your mortgage based on those contributions. Potentially downsizing when you get to a certain age when you retire, and essentially using that equity in order to pay that down. But potentially leveraging other investments that you could sell down in order to pay off that mortgage, whether it be getting access to superannuation. There's a plethora of different ways, but what we want to do is make sure that you've actually got a plan that essentially a good financial advisor will get a clear understanding of your current situation. They'll work out exactly what you're trying to achieve and what your goals and objectives are, because I also suspect that you want to be debt-free at some point in the future, so you can retire comfortably. And then basically crunching the numbers of what are the best pathways to get you to achieving those goals. And when we create that document, which is called a statement of advice, we typically utilize that as part of the borrowing process to highlight to the bank that you do have a really clear exit strategy to have that debt paid off, and that can help get that over the line. So if you are a business owner and you'd like to get some help with that, feel free to jump in my bio and click the link. Now you can get the details of how to get in contact with us. Let's have a conversation, because we can help you with both the strategic lending and the financial advice piece and help you work out the best pathway to achieving this goal. Any questions? Let me know in the comments.